Hello everyone, and thank you for taking the time to open this email and inviting me into your home or your office or wherever you might be while you're watching this message. You know, our economy has been experiencing an amazing bull market for almost 10 years now. It began on March 9th, 2009, when the Dow Jones Industrial Average bottomed out on what many people called the Great Recession. It has been a wonderful run for those who have trusted in the long-term cycles of our stock market. But lately, you might have noticed some increased pressure on that upward trend. In our world, we call this volatility, and you might have noticed it by the abrupt increases and decreases of your account values over the past 10 or 11 months or so. So I wanted to take a moment to let you know that as your financial advisor, that I like to keep myself well educated on things like the economy, investment strategies, and other factors that helps me be the best financial advisor I can be for my clients. This year alone, I've participated in a number of financial workshops and other economic briefings across the country to help me better understand things like our current economic condition and where we stand in our country's normal business cycle. There are several reasons why we are experiencing this heightened level of volatility lately, so I'd like to highlight a few of them here for you today. First of all, interest rates have been rising, and this is due partly from the actions of the Federal Reserve, who raised a key interest rate 3 times this year alone, and will probably raise it another time in the next year or so. Next, there has been increased international tensions concerning trade. As you may be aware, the U.S. has been in the middle of a trade negotiations with several countries, including our second largest trading partner, China. And last, our American dollar has been strengthening relative to other international currencies. And this makes the products sold by multinational corporations, like Apple for example, it makes it more expensive for them to sell their products in other countries. And that can impact profits. But we have to keep all of this volatility in perspective and view it against the backdrop of an economy that's still showing plenty of signs of strength. For example, inflation is still tame, and manufacturing activity is at a 13-year high. Median home prices is up, unemployment is down, way down, people are buying cars, businesses are buying semi-trucks, and the U.S. will cut its reliance on foreign oil to its lowest level in over 60 years. That's why, even with this volatility, the Dow Jones Industrial Average is still up over 5% since 1 year ago today, and the S&P 500 is up over 6%. And both indexes are up over 200% since the bottom of the last recession. I would like to close with this thought. No one can predict the day and the hour when the financial markets will correct, but it's bound to happen. But I want to let you know that I am keeping a close eye on the economic factors that move the markets. I will continue to do my best to help you navigate these volatile times and make recommendations that I believe are in your best interest. I value the personal relationship that I have with you and your family. You know, when we visit together and we talk about your goals and your dreams and the things that keep you up at night, you're actually helping me craft a strategy that's tailored just for you and your family. And that is just as valuable as the times I spend at these economic workshops. If you ever have questions or you just need to talk, I'm only a phone call away. Thank you for being my client. I don't take that responsibility lightly. Thank you again for watching.